Hi folks, welcome to RJ Impact. This is the third video to look at the different indictments that Sam Bankman-Fried is facing in the US. The first two videos looked at the indictments from the SEC, Securities and Exchange Commission, and the government against him. In this video, we're looking at the indictments brought by the Commodities Futures Trading Commission. The indictment itself is fairly long, it's 40 pages as you'll see, but I should be able to summarise its key elements fairly quickly. This is because one of the sections, number 5, called Facts, lays out a lot of the history of Bankman-Fried and the two companies FTX and Alameda Research. I've already laid out the facts as we knew them in the video called Crypto Dead FTX Bankman-Fried and Caroline Ellison on the story so far. I'll put a link to that video here and in the comments section if you're interested in a bit more detail. I will, however, quickly go through it with you and pick out any new facts or data that are particularly relevant. The indictment itself is broken into 6 sections, as you can see here, and we'll go through each of those in turn. So the first section, summary. Sam Bankman-Fried set up Alameda Research and then FTX Trading. When those companies went into liquidation in November 2022, there was an $8 billion deficit in customer funds that FTX should have been protecting on behalf of its customers. During his time of ownership and running of FTX and Alameda Research, the CFTC point out a number of events that SBF was involved in or orchestrated that led directly to the loss of those customer funds. Let's pick out and summarise the facts and events that the CFTC have identified leading up to the fraud allegations. Just in case you're not aware of the background to this case, you should be aware that FTX is a cryptocurrency trading exchange, which is primarily owned by Sam Bankman-Fried, although some shares are owned by third parties, and it was also funded by a number of lenders. Alameda Research is often called the sister company to FTX. It undertook trading in cryptocurrency through FTX and on its own account, and in theory should be entirely independent to FTX. Sam Bankman-Fried was CEO of FTX. He was also CEO of Alameda at the same time and resigned and appointed Caroline Ellison in his place to demonstrate to the investors in FTX that he was effectively independent. The first point I'll highlight is the fact that assets like cryptocurrencies and cash, etc., that were held by FTX on behalf of customers who were their actual owners and had deposited them with FTX were regularly transferred to Alameda, who then used them to trade on its own behalf. Also, Alameda actually took deposits from FTX customers that should have gone into FTX bank accounts or cryptocurrency accounts, etc., and Alameda used those for trading too. Apparently, there were a small circle of insiders who knew about this relationship, but they're not mentioned in this indictment, and I'm sure we'll find out pretty soon who they are. I suspect that they've been helping the authorities with their inquiries to get to this point. Also, despite the fact that Alameda and FTX should be independent, they weren't. For example, it had an unlimited line of credit, its trades were executed faster, etc. Next, Bankman-Fried and other FTX executives took hundreds of millions of dollars in poorly documented loans from Alameda, and they then used those to purchase luxury real estate and property and made political donations and for other unauthorized uses. The terms of service were therefore breached with customers of FTX. The terms of service said that customers had full control of their own assets and they were safeguarded and segregated from FTX, which of course they weren't. As a result of all this, the summary alleges that the defendants breached the Commodity Exchange Act, CEA, and other relevant regulations. The CFTC wants the defendants restrained from continuing these activities at any point in the future, as well as civil payment, ancillary relief and restitution, and anything else the courts may see fit. Jurisdiction is established in Section 2. It doesn't mention it here, but we've seen on the first page of this document that the court is actually the District Court, Southern District for New York. In the section Parties, obviously we've seen that the CFTC is the plaintiff and the defendants are Samuel Bankman-Fried, FTX Trading Limited, and Alameda Research, LLC. It does make the point that effectively Bankman-Fried, FTX, Alameda were all operated as a single integrated common enterprise by Bankman-Fried. Even the employees of the company, for example, shared offices, etc. together. In Section 4, Statutory Background and Legal Framework, it talks a little bit about the CEA, how it was created to serve the public interest, to defer market and price manipulation, and ensure financial integrity of transactions. And here we see why the CFTC is involved. Certain digital assets like Bitcoin, Ether, Tether, etc. are considered commodities under the Act. In this section there are also extracts from the relevant sections of the laws and regulations to show that they actually apply in this case, and the fact that the CFTC should be involved, and these are all put forward in this document. The facts. This is by far the largest section of this indictment, and as I said earlier on, I've actually covered most of this in a previous video, so I'm just going to pick out and highlight some key facts and data that weren't known before this indictment was unsealed. Communications with regulators and other people. FTX has said that it has auto-liquidation facilities in place for all of its customers. It neglected to tell them about Alameda's exception, and Alameda was by far FTX's biggest customer. Alameda and FTX have both made public representations that they were independent, but in reality this wasn't the case. Hence, Bankman-Fried was effectively CEO of both. The next point made is that FTX and Alameda commingled, mishandled and misappropriated FTX's trading customers' funds from the moment of FTX's launch. FTX customer funds that were actually sent to them by customers were actually forwarded, unbeknownst to the customers, to accounts owned by Alameda, and Alameda had actually created an entity with the name North Dimensions so the customer wouldn't know that they were related to Alameda. And even after that, the customer was actually told that yes, the funds were with FTX. Alameda accessed and used FTX customer funds for their own operations and activities. The next allegation is the misrepresentations related to the operations of FTX and Alameda. The obvious facts that are pointed out here are the terms of service with customers of FTX, which say that all the assets should remain with them and in their control, as well as this point Bankman-Fried and others told Congress, the CFTC and other federal and state governments and agencies that their customers were ring-fenced when they weren't. Bankman-Fried also voiced similar things to investors and to the public via Twitter. The next point made under facts is that Alameda had a special relationship and special privileges with FTX. We've heard previously that Alameda effectively had unrestricted credit facilities with FTX, and they also had the special privilege of having no auto-liquidation. In this section, it actually goes on to say the software was changed within FTX to allow Alameda to execute a trade when it didn't have the funds to actually do so. Apparently, in one meeting also, Bankman-Fried directed that FTX personnel raise the borrowing limit to a level for Alameda that would unlikely to ever be exceeded. There are several other processes and procedures within FTX that were circumvented to allow Alameda to avoid normal checks and balances on transactions. Again, if you've seen the video I did on this, you'll know that FTX issued its own token cryptocurrency called FTT. According to the indictment, one of the most significant holdings within Alameda was the FTT token, and there's one little throwaway comment which says, on information and belief, Alameda did not pay to acquire its FTT holdings. So hold on, let's step back a bit. Is this saying that Sam Bankman-Fried took the FTT tokens issued by FTX and gave them to Alameda, his own company? Well, call me a cynic, and it doesn't mention it directly here, but I think I know who gave the order to take FTX's FTT tokens and give them to Alameda. And I suspect that you'll be drawing the same conclusions as I am. The final point I picked up here is that there are clearly some accounting irregularities associated with the value of FTT tokens. Very quickly to explain this, the value of an illiquid asset has to be treated with some caution. For example, if lots and lots of that asset found its way into the marketplace, the price would probably crash. As a result, you need to provide discounted information about what the true price of your illiquid asset could be, given assumptions about what liquidity events could take place. The indictment says that Alameda took on larger loans backed by the collateral of FTT, and therefore we know that the collateral provided to the loan providers was really insufficient to collateralize the loan. F. Misappropriation of customer funds. The indictment hones in on the events early to mid this year, 2022, when Alameda was subject to a large number of margin calls and loan withdrawal requests. It didn't have the liquidity to do so. Remember the FTT tokens I've just told you about? That's what Alameda had to back up their loans, and of course it couldn't sell them. So what does Alameda do? It uses FTX's customer funds to fund large-scale withdrawals. We're talking several billions of dollars. And who does the indictment say was responsible for doing that? Well, Sam Bankman-Fried, of course. All these funds movements to help Alameda pay for its withdrawals created big balances between FTX and Alameda on their respective books. SPF directed that this be hidden by effectively renaming the Alameda accounts. And apparently he used to name it Our Korean Friend or the Weird Korean Account. So therefore, as it says in the indictment, it was no longer apparent on FTX's ledger that Alameda had an $8 billion negative balance on an FTX account. I think the indictment is pointing to this as being the case of willfully hiding evidence. G. The contemplated shutdown of Alameda. The point being made here is that Alameda had made such large losses it could never really pay them back, and was probably insolvent if it didn't have FTX to prop it up. There's a good example in this section of the way Sam Bankman-Fried talks and can never quite state the obvious. We've seen this in various interviews he's undertaken in the last few days. So about shutting down Alameda, he makes the point. The fact that we didn't hedge as much as we should have cost more in EV, expected value, than all the money Alameda has made or ever will make. Let me just rephrase that for him, shall I? I've been an extremely bad businessman. I've made some really bad trades and racked up huge losses. I took $8 billion of other people's money to cover my losses. It is now a pickle. The point actually being made here, of course, is that Bankman-Fried knew about the situation with Alameda, but he and Alameda were making the opposite claims in public statements. The November 2022 collapse of FTX trading and Alameda. A lot of this section just goes through the story of events that led up to the bankruptcy of FTX and Alameda. In the final couple of days leading up to its bankruptcy, the indictment says that Bankman-Fried had everybody looking for cash and crypto assets to keep up with the increasing numbers of withdrawals that were taking place. The indictment actually has a couple of the tweets that Bankman-Fried made in it, where he's denying that they didn't have the money to pay off all client assets. He also sent a false balance sheet to potential investors, which had the $8 billion account with Alameda hidden. It was actually labelled fiat account, as if somebody looking at it might think it's actual cash deposits. I think the CFTC are going to use this as another example of where Bankman-Fried is misrepresenting the reality. The indictment talks also about some of the live interviews that Bankman-Fried gave after the bankruptcy of his companies, and these are actually presented as evidence of him admitting these charges. This comment from him in an interview is actually in the indictment. He was asked to discuss what happened. He said, "Oh, FTX doesn't have a bank account. I guess people can wire to Alameda to get the money onto FTX. 3 years later, OF, it looks like people wired $8 billion to Alameda and oh God, we basically forgot about the stub account that corresponded to that, and so it was never delivered to FTX. The impact of these events on digital commodities futures markets. The indictment maps some of the events going on at FTX with the various falls in commodity prices, like Bitcoin for example. I think it's fairly compelling that the events at FTX had these impacts that the CFTC are pointing to in the graph, and I won't go into the graph in any detail. So now we move on to the counts in Section 6, Violations of the Commodity Exchange Act and Regulations. We have the following counts. Count 1 is fraud. Count 2 is fraudulent misstatements of material facts and material omissions. And it took 35 pages to get to that point. In Section 7 we have the relief requested by the CFTC, and they want a ban on Sam Bankman-Fried engaging in any trading, getting involved in any commodity interest relating to digital assets, and quite a wide-ranging ban on him getting involved in the industry or dealing with it in any way, to make full restitution, to pay civil monetary penalties, to pay costs and fees, and just anything else that we or the court deems proper. And in the final section here we have 8, demand for jury's trial, which is self-evidentary. Before I sign off, if you've liked this video, then please consider giving it a like, and if you subscribe to the channel, you will have my fondest thanks in return. Bye for now.